This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE and Raleigh Goldsboro Recycling, May 30th, 2017. Last week, commodity prices and economic reports were little changed. U.S. steel production rose slightly and has been trending up slightly for the past 2 months. It also remains slightly ahead of the past 2 years at this point in the year. Oil rose about $1.50 a barrel to $52.15, showing signs of stabilization in the $50 area, a major positive for U.S. oil production. As OPEC makes cuts, the U.S. has been increasing production. There is a report that U.S. oil production hit a new all-time high in 2018, which will help keep global commodity prices in the oil area at $50 per barrel. The oil rig count rose to 722, well more than double the 316 low of last year. As for upside, 722 is still down 55% from the 1609 of about 3 years ago. Iron ore fell $1 a metric ton to about $60.50 a metric ton, still about double a year ago, but off its recent high of a month ago. Scrap ferrous prices were steady as volumes coming into scrapyards have been steady as well. While some have said there could be a downside to prices this week, there does seem to be a balance in supply and demand, so as slow global growth continues, so if prices are down, it could be limited. Hot dip galvanized steel remains steady yet again at $900 a metric ton. Automotive is a bit weak, but appliances and other markets are keeping strong, so that therefore prices remain somewhat steady. Stainless 304 scrap stayed steady at 36 cents, showing major signs of equilibrium. Copper fluctuated during the week, but ended at $2.57 a pound on little global economic news. Prices are down a penny this morning to $2.56. The 5-year chart shows stabilization at the somewhat lower price of a few months ago, yet prices remain above where they were 18 months ago. And copper inventories remain near 12-month highs, which is keeping downward pressure on those prices. Aluminum prices also remain unchanged at 88 cents, near almost 2.5-year highs based on solid demand and steady production. Aluminum inventories had one of their first rises in months, but remain near about 9-year lows, keeping upward pressure on prices. Moody's, one of the big credit rating agencies, lowered China's credit rating, citing concerns over a slowing economy and growing debt, putting downward pressure on commodity prices. First quarter U.S. GDP growth rate had originally said to be a very slow 0.7%, but was just revised up to 1.2%. A question is, can growth get to 3%, which is what the Trump administration is saying can happen? Sales of new family homes were near a 9.5-year high in March, but slumped 11.4% in April, to an annual rate of 569,000. As for positives, this is more than double the 2011 low, and it is at the rate that the U.S. had in the mid-1960s when there were 194 million people living in the U.S. Today we have about 325 million, almost 67% more. So there's major upside here. The U.S. initial jobless claims rose slightly to 234,000, but remains well below the 300,000, which is a key indicator for growth. The 4-week average, which removes weekly volatility, was 235,000, the lowest number in 44 years. Great data like this leads to supporting steady to higher commodity prices. Wall Street's Dow Jones Industrial Average ended near an all-time high, while the other major indices, the NASDAQ and the S&P 500, did hit new highs. This remains a very big positive for the economy as people feel the wealth effect of having more assets, so they spend more, which supports stable commodity prices. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week.